welcome to the deep dive.
Yeah.
Today, we're going deep into UAE corporate taxes.
Yeah.
Specifically, their free zones.
Right.
You sent us some official UAE government documentation on the subject.
Right.
Looks pretty comprehensive.
Yeah, it is.
I'm really curious to unpack this and see how these free zones work.
It is comprehensive. And what's really interesting is that free zone businesses can achieve a 0% corporate tax rate
Oh.
on some of their income.
Really?
It's a pretty attractive proposition.
Yeah.
But like any tax system,
All right.
there's a lot of fine print.
Okay, so 0% corporate tax sounds amazing,
Yeah.
but I'm guessing it's not as simple as just setting up shop in a free zone.
Right.
Who exactly can take advantage of this setup?
The UAE has very specific definitions.
Okay.
The key term here is qualifying free zone person,
Okay.
which essentially means a company or branch officially set up within one of these designated free zones.
So if a company, say, from Europe wants to benefit,
Uh-huh.
they can't just keep their headquarters there and open a small office in a free zone.
That's right.
They'd have to actually relocate.
That's exactly what caught my eye.
Really?
It seems the UAE is incentivizing companies to really make the Emirates their base, not just have a satellite office. And it's not just about paperwork.
Yep.
They're looking for adequate substance.
Adequate substance.
Meaning you can't just have a mailbox in a virtual office.
Right.
The UAE wants to see actual operations, employees, and spending happening within the free zone.
So they're really serious about this.
Yeah, they're looking for businesses that are truly contributing to the local economy.
That makes a lot of sense.
Yeah,
It seems they're aiming to build a vibrant and active business ecosystem.
exactly.
But let's get to the juicy part, this 0% tax rate.
Okay,
I'm assuming there are some caveats.
of course.
The document mentions qualifying income.
Yes.
What falls under that umbrella?
There are two main categories.
Okay.
The first is income from transactions with other free zone persons.
Okay.
Think of it as fostering trade within those zones.
So if a free zone company is selling goods or services to another company within the same zone,
Yeah.
that income wouldn't be taxed.
Exactly.
Makes sense. What about this second category?
The second category is a bit more specific.
Right.
It covers income from qualifying activities.
Okay.
Like manufacturing,
Uh-huh.
holding company activities,
Okay.
and reinsurance.
Got it.
These are the sectors they're really aiming to attract.
So it's not just about where you're doing business, but also what kind of business you're doing.
Precisely.
Now, here's a question that popped into my head. What about businesses that interact primarily with individuals,
Right.
not other companies? Think e-commerce or retailers selling directly to consumers.
Right.
Does that 0% benefit apply to them?
That's a great question, and it's where things get a bit more complicated.
Okay.
The document specifically states that transactions with individuals, or natural persons, as they call them,
Right.
usually don't qualify for that 0% rate.
Interesting.
There are a few exceptions, though, like ship ownership and aircraft finance.
Ah. So a company selling handmade crafts online to individual customers might not get that tax break,
Right.
even if they're operating within a free zone.
Yeah.
So this 0% rate isn't a blanket benefit for every free zone business.
That's an important point.
There are definitely some limitations.
Yes.
Now, I'm also seeing a whole section in the document about excluded activities.
Uh-huh.
What are those all about?
This is a critical point.
Okay.
There are certain activities that can disqualify business from those free zone tax benefits,
Oh, wow.
even if they're otherwise meeting all the requirements.
Okay, that sounds serious.
Yeah.
Can you give us some examples? What kind of activities are we talking about?
Sure.
Yeah.
Dealing with individuals for most transactions, as we just discussed, is a big one.
Got it.
Regulated banking and insurance activities are also on the list.
Mhm.
And owning or exploiting non-commercial property is another potential pitfall.
Yeah.
They're really trying to ensure that these free zones are hubs for specific types of businesses and activities.
So careful planning is crucial.
Absolutely.
You can't just assume that being in a free zone automatically means you'll get that 0% tax rate.
Right.
You have to really understand the rules of the game.
Exactly.
But what if a business makes a genuine mistake?
Uh-huh.
What if they accidentally end up with a bit of non-qualifying income?
Okay.
Is it all over?
Not necessarily. Thankfully, the UAE has something called the de minimis rule,
Okay.
which acts as a safety net.
Okay.
It acknowledges that businesses might unintentionally generate a small amount of income that doesn't fit the criteria.
That's a relief.
Yeah.
So how does this de minimis rule work? What's the threshold?
Here's the breakdown.
Okay.
If the non-qualifying income is less than 5% of your total revenue,
Hmm.
or less than 5 million AED,
Okay.
you're still good.
All right.
It gives businesses a little breathing room.
While that seems helpful, isn't there a risk that businesses might try to exploit this rule?
There's always that possibility.
Right.
But remember, this rule doesn't give businesses a free pass to be careless.
Okay.
They still need to be diligent about tracking their income sources
Uh-huh.
and ensuring they're not exceeding those limits.
Right.
Transparency and accurate record keeping are crucial.
All right, let's get into some specifics.
Okay.
The document mentions real estate in free zones.
Yes.
How does that play into the tax situation?
This is where the location of the property really matters.
Okay.
If you own commercial property in a free zone and you're renting it to other free zone businesses,
Okay.
that rental income qualifies for the 0% rate.
Okay, so if you're contributing to that free zone ecosystem,
Right.
you're rewarded with the tax benefits.
Exactly.
But I'm guessing there's a but coming.
There is.
Okay.
If you're renting that same property to individuals,
Uh-huh.
mainland companies, or dealing with residential property,
Right.
that rental income gets taxed at the standard 9% UAE corporate tax rate.
So there's a clear distinction between commercial and residential real estate
Yes.
and who you're renting to.
Right.
And the document actually defines commercial property, right?
It does.
What exactly does that mean?
It specifies that commercial property must be used solely for business activities
Okay.
and can't be used as a residence.
So no renting out that swanky free zone apartment and claiming the 0% tax rate.
Exactly.
That makes sense.
Yeah.
They're really drawing a line in the sand to encourage legitimate business activity within these zones.
They are.
But this all assumes the business is operating entirely within the free zone.
Right.
What happens if a company has operations both inside and outside the free zone?
Okay.
Let's say in mainland UAE or even a foreign country.
That's where the concept of a permanent establishment comes in.
Okay.
Any profits generated from a permanent establishment outside the free zone are subject to the standard 9% corporate tax rate.
Okay, so even if you have a free zone presence, anything you do outside that designated area might be taxed differently.
That's right.
Now, what about double taxation?
Okay.
If a company has a permanent establishment in, say, France, do they end up paying taxes to both France and the UAE on the same income?
That's a very important question.
Yeah.
The good news is that the UAE has a network of double tax treaties with many countries, including France. These treaties are designed to prevent double taxation.
Got it.
So businesses aren't penalized for having an international presence.
That's reassuring for businesses with global operations.
Yes.
So just to be crystal clear, having a company within a free zone doesn't automatically grant you a 0% tax rate, right?
That's correct.
There are still conditions and qualifications you have to meet.
Absolutely. Free zone persons need to meet all of these conditions we've discussed to qualify for that 0% rate.
Right.
And even then, there are compliance requirements they need to fulfill.
Can you elaborate on those requirements? What are some of the key things businesses need to be aware of?
For starters, they need to maintain audited financial statements.
Okay.
They also need proper transfer pricing documentation, particularly important if they're dealing with related parties.
Got it.
And perhaps most importantly, they need to prove they have adequate substance in the free zone.
Right.
That means having enough staff, assets, and operating expenses within the zone to demonstrate real business activity.
So it's not just about setting up a shell company in a free zone and calling it a day.
Well,
you have to be actively operating there.
Yes.
Contributing to the local economy.
Right.
And following the rules.
Exactly. Careful planning, due diligence, and ongoing compliance are crucial to taking full advantage of the free zone tax benefits.
Right.
Cutting corners can lead to losing those benefits and even facing penalties.
We've covered a lot of ground so far.
We have.
We've looked at who qualifies for these free zone benefits, the types of activities and income that are included and excluded, and importance of compliance.
Yes.
But there's more to this story, right?
There is. The document also highlights some other factors that could affect a business's tax strategy.
Like what?
Like global minimum tax rules.
Okay.
And the specific filing requirements for free zone entities.
So this deep dive is getting deeper by the minute.
It is.
It sounds like we have a lot more to explore.
We do. There are still some critical insights to uncover that could significantly impact a business's decision to operate in a UAE free zone. You mentioned global minimum tax rules.
Yeah.
These are part of the OECD's Base Erosion and Profit Shifting Project.
Okay.
Or BEPS for short.
Right.
It's a global effort to ensure large multinational companies pay a minimum level of tax,
Uh-huh.
regardless of where they operate.
So even if a free zone entity manages to snag that 0% rate under UAE rules,
Right.
they might still get caught by these global minimum tax provisions.
Yeah, that's a possibility.
That seems like a bit of a curveball.
It's a definite concern. The impact will depend on the specific details of how the OECD's Pillar 2 rules are implemented and how they interact with the UAE's free zone regime.
So there are a lot of unknowns right now.
There are. It's something companies operating internationally will need to watch very carefully.
It seems like a lot for businesses to keep track of.
It is.
It makes you wonder if that 0% rate is worth the potential headache of navigating all these rules and regulations.
Yeah, it's definitely a balancing act.
Right.
And to add another layer of complexity,
Oh, yeah.
the document clearly states that all free zone entities,
Okay.
even those enjoying the 0% rate, must register with the Federal Tax Authority.
So they have to register regardless.
Yes, and file a corporate tax return.
Wait, so even if they owe zero tax, they still have to go through the whole filing process.
That's right.
That seems a bit counterintuitive, doesn't it?
It might seem that way.
Yeah.
But it's all about maintaining transparency
Okay.
and demonstrating compliance with the UAE's tax system as a whole.
So it's more about oversight than actual revenue collection in those cases.
I think so, yeah. It's a way for the government to keep tabs on things.
Right.
And ensure everyone is playing by the rules.
I suppose that makes sense from a regulatory standpoint.
Yeah.
So with all these conditions, rules, and potential global tax implications, what's the bottom line for someone considering setting up shop in a UAE free zone?
Okay.
Is it still a good deal?
In my opinion,
Right.
the UAE's free zone tax regime still offers a very compelling opportunity for businesses
Right.
to significantly reduce their tax burden.
Yeah.
That 0% rate on qualifying income is a major draw, especially for companies operating in the right sectors.
But as we've discussed, it's not a simple plug-and-play situation.
Exactly. Businesses need to carefully structure their operations and activities
Okay.
to ensure they meet the requirements for qualifying income.
Right.
They need to understand the nuances of excluded activities, the de minimis rule,
Right.
and the potential impact of global tax regulations.
It sounds like working with a tax professional who understands the intricacies of this system would be essential.
Absolutely.
It's not something you'd want to try and figure out on your own.
I completely agree. Navigating these rules can be incredibly complex.
Yeah,
And the consequences of getting it wrong can be significant.
for sure.
Having expert guidance can be the difference between success and a costly mistake.
So to recap,
Okay.
we've discussed who qualifies for the free zone tax regime,
Yep.
the types of income and activities that are included and excluded, the potential impact of global minimum tax rules,
Right.
and the importance of compliance and seeking expert advice.
Absolutely.
Is there anything else we've missed?
Let's touch on one more point the document highlights.
Yeah.
How the free zone regime interacts with businesses that have a presence in multiple locations.
Okay.
We talked about permanent establishments,
Right.
but there's another term that comes up, designated zones.
Designated zones.
Yes.
What are those?
A designated zone is a special type of free zone.
Recognized for VAT value-added tax purposes in the UAE.
Okay, so how does that tie into corporate taxes? It seems like we're adding another layer of complexity here.
It's all connected.
Okay.
Qualifying free zone persons can get that 0% tax rate on income from wholesale distribution activities if they're operating within a designated zone and selling to domestic or foreign businesses.
So it's like an extra layer of tax advantage for certain types of businesses within specific free zones.
Exactly.
But what if a free zone person isn't in a designated zone?
Okay.
Can they still distribute goods?
They can, but there's a restriction.
Okay, what's that?
The 0% rate only applies if they're selling to other free zone persons.
Okay.
If they sell to someone in mainland UAE or a foreign business, they'll be subject to the standard corporate tax rate.
So designated zone status is something else businesses need to consider when planning their free zone operations.
Yes, very important.
It seems like there are a lot of moving parts to this whole system. That's why I can't stress enough the importance of careful planning.
Right.
Understanding the distinctions between free zones, designated zones,
Right.
qualifying activities, and excluded activities is absolutely crucial for making informed decisions about your business structure and tax strategy in the UAE.
It's like a giant jigsaw puzzle where you need to have all the pieces in the right place to see the complete picture.
A great analogy.
Speaking of seeing the complete picture, The document also mentions that foreign companies can qualify for these free zone benefits in two ways.
That's right.
Can you explain those?
Absolutely. Foreign companies can either set up a branch in a free zone or go a step further and actually transfer their place of incorporation to the UAE.
So they're really incentivizing foreign businesses to make a full commitment to the UAE.
They are.
And are there any restrictions on ownership?
Okay.
Can a free zone company be fully or partially owned by foreign individuals or entities and still qualify for the tax benefits?
That's a great question. There are no restrictions on foreign ownership.
Oh, wow.
A free zone company can be 100% foreign owned and still enjoy the tax benefits.
So there's a lot of flexibility there.
This really opens the door for international businesses looking to establish a presence in the UAE.
It sounds like the UAE is rolling out the red carpet for foreign investment with these free zones.
They are, but as we've discussed, it's not as simple as just showing up and expecting everything to fall into place.
Right.
There are rules, regulations, and a lot of planning involved.
All right, so we've covered a lot of ground today.
We have.
What are some key takeaways our listeners should keep in mind as they consider the UAE's free zone corporate tax regime?
Here's what I would emphasize. The UAE's free zone corporate tax regime offers significant tax advantages.
Okay.
But qualifying for those benefits requires careful planning and ongoing compliance, understanding the definitions of free zone persons, qualifying activities, excluded activities, designated zones, and the implications of permanent establishments is crucial for making informed decisions.
And don't forget the importance of maintaining adequate substance in the free zone.
Yes, very important.
Having proper documentation and seeking professional advice.
Absolutely. Failing to meet these requirements could result in losing the tax benefits and facing penalties.
Right.
It's not worth taking shortcuts when it comes to something as important as taxes.
Right. This deep dive has definitely highlighted the importance of being well-informed and having the right support.
It has.
When navigating the complexities of international tax systems.
I couldn't agree more. Knowledge and preparation are key to maximizing opportunities and minimizing risks in any business venture, especially when operating in a foreign country.
Well said. Now, before we let our listener go, I think it's time for our signature move.
Okay.
Leaving them with a final thought to ponder.
I love it.
Something that wasn't explicitly mentioned in the document,
okay,
but builds on what we've discussed.
All right. I'm intrigued. What do you have in mind?
We've talked a lot about how the UAE is attracting businesses to its free zones with these tax incentives.
We have.
But what about the broader economic impact?
Okay.
How does this strategy affect the UAE's overall economic development and diversification goals?
That's a fascinating question.
Yeah.
It would be interesting to explore how the growth of free zones is contributing to the UAE's transformation into a knowledge-based, innovation-driven economy.
And how these zones might be impacting industries beyond just those explicitly listed as qualifying activities.
Yeah, good point.
Could they be creating a ripple effect throughout the UAE's economy?
It's definitely possible.
It seems like there's a bigger story here beyond just the tax benefits.
It does, and it would be interesting to see how this strategy plays out in the long term.
Yeah.
Especially as global economic trends continue to evolve.
Great point. We've given our listener plenty to think about.
We have. And if they're interested in learning more about the UAE's free zone corporate tax regime,
the full government document is readily available online.
Excellent point. Always go back to the source for the most accurate and up-to-date information.
Absolutely.
And on that note, I think it's time to resurface from this deep dive into UAE free zones.
Agreed. It's been a fascinating exploration.
It has.
And I hope our listener feels equipped to continue their own research and make informed decisions.
It's fascinating how these strategic tax policies can have such a widespread impact, shaping entire economies.
It really is.
Who knew we'd end up discussing economic diversification in a deep dive about corporate taxes?
Right. It's all interconnected. And that's what makes these deep dives so rewarding.
Yeah.
We start with a specific topic and uncover so many unexpected layers of insight.
It's like we're on an archaeological dig, brushing away the dirt to reveal a hidden city.
I like that.
And instead of ancient artifacts, we're finding these nuggets of economic wisdom. But speaking of uncovering things, there's one aspect we haven't touched on yet. What happens if a free zone company decides to distribute goods?
Is that treated differently under this tax regime?
That's a great point. The document does delve into how distribution activities are treated.
Okay.
If a qualifying free zone person is engaged in wholesale distribution within a designated zone.
Uh-huh.
Remember those special zones we talked about earlier?
Right, right.
And they're selling to other businesses, either domestically or internationally.
Okay.
They can maintain that 0% corporate tax rate.
So it's like a bonus incentive for wholesale distributors operating within those designated zones.
Exactly.
But what if a free zone company isn't located in one of these designated zones?
Okay.
Are they completely out of luck if they want to distribute goods?
Not entirely.
Okay.
They can still distribute goods, but there's a catch.
What's that?
The 0% rate only applies if they're selling exclusively to other free zone persons.
Okay.
If they sell to a business in mainland UAE or a foreign company outside the free zones, they'll be subject to the standard corporate tax rate.
So designated zone status plays a significant role in how distribution activities are taxed.
It does, yeah.
It seems like every decision a business makes, from location to the type of activity, can have tax implications.
Absolutely. And that's why thorough planning is so crucial.
Right.
Businesses need to carefully consider all these factors to create a tax strategy that aligns with their goals and ensures compliance with the UAE's free zone regulations.
It sounds like a lot to juggle.
It can be.
Would you say that the benefits of operating in a free zone outweigh the complexities for most businesses?
It's a tough one. It depends.
Okay.
The potential for significant tax savings is definitely there.
Right.
But it's not a one-size-fits-all solution.
I see.
Businesses need to carefully weigh the advantages against the compliance requirements and the potential for unforeseen challenges.
Like what?
Like the impact of global minimum tax rules, for example.
It seems like seeking expert advice is non-negotiable for any business seriously considering the free zone route.
I would agree with that.
Trying to navigate these intricacies alone would be like trying to climb Mount Everest without a guide, risky and potentially disastrous.
100%. Having a knowledgeable tax advisor on your team can make all the difference.
Yeah, for sure.
They can help you assess your specific situation, develop a sound tax strategy, and ensure you're meeting all the necessary compliance requirements.
Well, this has been a truly enlightening deep dive into the UAE's free zone corporate tax regime.
It has been.
It's a complex system, but you've broken it down beautifully.
Well, thank you.
And our listeners should now have a solid grasp of the key concepts.
I hope so.
I think they do.
Good.
So as always, we encourage our listener to delve deeper into the source material.
Yes, definitely.
Consult with experts and approach this opportunity with a healthy dose of curiosity and diligence.
Absolutely.
The world of international taxation is constantly evolving.
It is.
So staying informed and adaptable is key.
Well said. On that note, I think it's time for us to resurface from this fascinating deep dive. Until next time, happy exploring.
Happy exploring.